he's put himself in a box, and we will definitely know whether he's, pivoting or not, because he basically said another 75 in November. And now with the emergency, quote unquote, Fed meeting, there are people doubting that. And whether he goes through with it or not, he's not gonna be able to hide that, right? So in the past, where he wasn't committal as to what level he was gonna do, and then the market would say, well, how about 25? Well, how about 50? Well, how about 75? And like the day or two before, they would leak through other Fed governors talking that, well, maybe we are considering 75, maybe we are considering 50. And so they always kind of gave a little indication. So he'll probably do the same thing in advance of the meeting this time.
Hey guys, welcome back to Library of Wealth. Today we have American investor Mark Yusko on the financial economy, Bitcoin, and the future of crypto for 2022. Yusko says that the crypto winter has ended and everything is starting to increase. He says that the system currently has an excess degree of stupidity and leverage. Currently, a lot of individuals are having their Bitcoin confiscated by businesses who overlend, while guaranteeing a higher rate of return. According to Yusko, the majority of these business models have been eliminated from the system, but some have persisted. The higher highs and the lower lows in the charts indicate the start of an accumulation cycle. Let's listen to this interview with Mark Yusko as he gives us his take on the financial market and the future of cryptocurrency. Don't forget to like and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
But here's the real issue. How many rate moves are going to solve the supply chain problems in China? None. You can't fix that. How many rate changes are going to fix the price of wheat coming out of Ukraine? Can't fix that. How many interest rate moves are going to change the price of gas coming from Russia, to what was coming to Europe? Now they bombed the, somebody, maybe we bombed the pipeline. Somebody did. So all of that is a moot point as far as I'm concerned. All the Fed funds rate does is liquefy the banks, right? That's what it does. Banks borrow from each other at Fed funds, and then they invest in the Treasury market and arb the spread. That's harder to do today because you got an inverted yield curve, which portends recession. So I think they're closing in on that neutral place where then they're going to have to cut. Well, again, what does cutting do? It isn't going to change demand for credit. You and I don't get to borrow at Fed funds. The average person doesn't borrow at Fed funds. I just saw a stat yesterday. The average car payment is over $700. The average loan is now closing in on 7 years. That's just a rental, right? You don't own your car. If you have a 7-year loan, you will be upside down for sure. There will be no equity, and you'll pay a lot of interest. And the other thing is, the average interest rate on car loans is double digit. Most people have no idea that's true. They talk about 0 rate loans, and that's for the really good credit crew. The average subprime borrower is paying 12, 14, as high as 29%. Paul, imagine paying 29% for a car loan. But there are a lot of people, that's their only choice. They want to get to work. So the big thing for me is earnings. We're in Q4.
Right.
How are Q3 earnings going to be? Everybody promised us that they were going to be awesome. Microsoft said, we're going to be back to double-digit growth. Okay, let's see it.
According to Yusko, all economies and markets will crash as soon as the system's supply of free money is exhausted. Yusko says that inflation is a fallacy that benefits only those at the top of the pyramid. We have the highest wealth and income disparity in the world because the Fed has been gradually removing money from the general public and giving it to the wealthy.
Look, I mean, gravity is an interesting thing in that, once you start hurtling towards Earth, the likelihood that you're just going to stop on a dime is really, really low, right? You look at all of those trends, you don't see any of them go up and then flatline, or go down and then flatline. They go up further than you think, or they go down further than you think, and then they bounce sharply. So, we're in every day, you see a headline of some big company making layoffs, right? Every single day. And, I've been impacted in my own extended family. People have been, furloughed. So I see it, and I see it everywhere. And this thing about jobs and the high level of employment, it's a little bit of fudged numbers. So two things. One, you got the people that every day 10,000 people turn 65 in this country for the next 17 years. And the problem with that is they take those people out of the workforce. So the workforce participation rate goes down, and then the quote unquote employment rate stays high. Well, that's bogus. Have you been in a Walmart lately? There's plenty of people over 65 that are still working. So second thing is the BLS, maybe take out the L, makes this thing called the birth-death ratio. So about 70% of the jobs that have been created this year aren't real. And what do I mean by that? Well, I mean exactly what I just said. They're not real. They say we're this long into a expansion, which by the way, we're not in an expansion. We're in a recession. They just haven't called the recession yet. So they say this long into an expansion, this many companies form and this many companies die, birth, death. So therefore this many jobs are created. I'm like, well, why don't you actually count the jobs? We have technology now. Like we know exactly how much payroll tax is being paid. We could tell you exactly how many jobs. It's like the farce of the IRS. They know exactly how much each of us owe them, right? Because if we don't pay that, we get fines and penalties. So why don't you just tell me and I'll pay it, instead of having me prepare it or pay someone to prepare it. And then if I'm wrong, if I guess wrong, you fine me.
Yeah.
That's a farce. That's a full employment act. So same thing is true here. And the idea that people hang on these jobs numbers. And then the last point I'll make is if you overlaid housing prices on that jobs opening,
look the same.
Where the head goes, the body follows.
Yeah.
Housing prices are collapsing. Used car prices are collapsing. Those are both indicators of a crunch on household income. I think it all comes down to the tug of war between reality and expectations, Fed expectations. The reality is GDP globally is falling.
Yeah.
Okay. That's a reality. That's truth. Earnings are going to disappoint pretty dramatically. But see, here's the game we play. So a year ago, a company tells me they're going to make $1. 6 months ago, they tell me they're going to make 50 cents. Last week, they tell me they're going to make 10 cents. And then they report 11 cents and call it a beat.
Yeah.
Like, how is that a beat? You underperformed by 90%, but because you lowered the estimate right before the announcement, everyone calls it a beat. That's not a beat. Yeah. So that gamesmanship will happen. And then here's the thing. We've become addicted to free money from the Fed.
Sure.
As a culture, as a society, like, California's sending out checks. Think of the illogic of this. They're sending out money to people to combat inflation, which was caused by sending too much money right after the lockdown.
To the people. Yeah.
We printed too much money. It caused the inflation. It caused oil prices and used car prices to rise. And now we're sending people more money, trying to combat inflation. You're creating inflation, trying to combat inflation. It doesn't make any sense.
Yusko says that the continued negative sentiment, which results in more volatility, is the reason why it's still crypto spring. Many people were unable to purchase Bitcoin this year because they lacked either confidence, guts, or money. He says that when compared to 3- and 4-fold assets at the bottom, Bitcoin and Ethereum are easy. Yusko asserts that we will soon start to inflect and that the system needs greater newcomers and adoption. According to Mark, people need to grasp that cryptocurrencies are the financial system of the future and our generation's greatest potential for wealth development. What do you guys think about Mark Yusko's opinion on crypto being the future of money and how Bitcoin will play a role? Let us know in the comments below. Thanks so much for watching. Don't forget to like and subscribe. This is Library of Wealth. We'll see you in the next video.